We're catching up with Gary Wagner ahead of Friday's non-farm payrolls this morning. Gary, good to see you again.
My pleasure to be here and welcome in a new year, 2015.
Now, Gary, we saw gold hit a new daily high on Thursday ahead of non-farm payroll numbers. How do you see the yellow metal set up here this morning?
Well, we've had this interesting tug of war. Gold is, intrinsically a barometer of other factors that are going on in the economy. And of course, as we went in towards the end of the year, when we look at the bottom that it hit, I believe, back in November, when we made that new low at 1130, we have really bustled up. So we've seen some intrinsic strength in gold. At the same time, we've seen definitive resistance come in roughly at about 1230. And the inability for it to really make a new high really tells me that we could see further pressure in gold prices.
Gary, last time you were on was in December, and you were speaking with Alex, and you were noting how gold really had to end off 2014 at 1180. It actually ended up closing a little higher at 1184. You also mentioned how gold needed to break key resistance at 1254 in order for you to think that gold was headed higher and is headed higher. Have your levels since changed?
No, the numbers really are remaining the same. And what I really found most interesting when I took a look at the performance of gold over 2014 is it closed at roughly the same place that it opened at the beginning of 2014 and at the end. So it closed roughly at that $1,200 level. At the same time, we saw the dollar go to historical highs, I believe a 4-year high. The Standard & Poor's, Dow Jones Industrial is going to record highs. So when we look at it within that context, the numbers have not changed. The only thing that I'm looking at is whether or not 1200 right now as a level will actually hold.
All right, Gary, now before we get to your insert, I'd like to get your thoughts on the current descent of crude oil here. Some analysts remarking how crude will negatively affect commodities across the board, yet gold prices are currently at their highest level relative to oil since the late 1990s, this according to CNBC. So bullion really seems to be retaining some of its appeal here, Gary. What do you make of the current correlation between gold and oil?
Well, when we look at a correlation between gold and oil, traditionally, what we focus on is the fact that if oil does rise in price, that tends to be inflationary. And of course, we have a direct correlation between inflation and gold. However, we have seen a basic disconnect in the market in terms of that standard correlation. So there have been times where we've seen oil and gold move in tandem, and times when they have moved inverse to each other. So my sense is that initially lower oil is really going to fuel a rebirth in the economy, because although there's talk about commodities moving up in price, transportation costs are lower, there's many costs that go down across the spectrum of businesses with lower oil pricing. So I think that the effect of lower oil pricing, except for the oil companies, of course, is going to be very positive.
All right, Gary, on that note, what have you brought us today?
What we're going to do, it's going to be an update from our Outlook 2015 that we did last year, and we're going to incorporate the new data or the new price changes since that insert was done.
All right, let's get to it.
This being only the first week of 2015, we certainly have gotten off to quite a bang in the markets themselves. The volatility that we saw as we went into the end of last year and the new year, of course, is still there, very present and affecting the markets. We're taking a look right now at a quadrant with 4 different commodities. Upper left, we have gold. Equities markets, this is the Standard & Poor's 500. Up here is our dollar index, and finally, crude oil. And viewers, if you recall from our last segment, which was actually our Outlook 2015, we talked about the fact that the higher equities markets, the very, very strong dollar, and weak crude were putting substantial pressure on the precious metals market, specifically gold, and my sense was and still is that all things being equal, meaning if we continue to have a strong dollar and a strong equities markets, we could see more downside pressure on gold. However, what we have seen as we got to the beginning of this year was actually a continuation of a rally in gold that really began, the first week of November. And traders, to really illustrate what we have seen recently, I'm pulling up a half a day, 720-minute standard candlestick chart. And beginning of November was really where we saw gold, which was trading at about 1250, run down to a new low below 1180 and actually touched 1130. Since that point, we have had the market move up. As you can see, we have had a series of higher lows. It's the first thing that we look at. At the same time, as the market rallied, at the beginning, we had a series of higher highs. However, on this last particular rally, which started towards the end of last year, really into the beginning of January, we had this rally, but the rally actually gave us a lower high. So what are we seeing? Well, we're seeing this pattern in which we're getting a compression of lower highs and higher lows. That being said, it is unmistakable that we have had a rally, a fairly sizable rally, in which we've seen the market move to its highs over $100. And the other thing is that as this market came up on this last rally, really through Christmas, New Year's, into this week, it actually touched upon a high above this resistance line of approximately 1223. Market's currently trading at 1211. And my sense is the number that we're looking at is 1217. A break above there would break it above this line, and we would want to see if the market would go to retest a couple of numbers that are important to us, of course, this being roughly 1240, 1241 right here, and then this top, which is absolutely necessary if we are to determine that this last rally in gold is truly a pivotal reversal, a key reversal, or simply a counter trend to the defined downtrend that we have seen in the market over the last couple of years. We are now armed with some key levels that gold needs to move to, which would either confirm or deny that this most recent rally is either a counter trend or a key reversal area. The other thing that we want to look at, obviously, is the markets that have been greatly influencing gold recently. And I believe the dollar and equities have been substantially the greatest outside influence. With that in mind, we're looking at a weekly chart. This is the Standard & Poor's 500, the E-mini. And really, it's a very, very simple study that we've created in which we have said that the market, of course, bottomed out after the crisis in 2008. It bottomed in 2009. We had a wave 1, and then we had our wave 2. My belief is that we're currently in a wave 3 within this market. Now, one of the models that we look at in terms of an Elliott wave forecasting system is that wave 3 can either go to 150 or 161% that of wave 1. And so we've created a basic extension here. And on this extension, what you can see is that in different areas, we're currently just about at the 150. That would be 2093, and I believe the highs that we've had have been roughly 2090. We can also see that there has been resistance, and that up to date has been the key level. If the market would correct from this point, that, I believe, would really throw the emphasis of bullish sentiment back into the gold market. However, if we do have a recovery and this market breaks above this particular point, the next level that we would look at would be 2081, and that would be based on a 161% extension of wave 1 to wave 3. For those of you who want more information on this topic, I invite you to go to our site, thegoldforecast.com, and sign up for our free trial. Now, the trial is a 1-week trial, but during that time, not only will you get each and every daily report, but you'll also have access to our extensive library Again, my interim and short-term analysis or outlook for gold 2015.
Thanks for starting off the year with that, Gary. Thanks so much for putting that together for us.
My pleasure, and I want to wish all of our Chart This viewers a great weekend and prosperous trading and investing next week. We'll talk to you real soon.
And thanks for watching Chart This with Gary Wagner. We'll see you next week. Thanks for watching.